Hey, what's going on, everybody? Today we're talking Nvidia stock research, ticker symbol NVDA. As a disclaimer, this is not investment advice. This is just a research video that I put together meant to be educational as well as entertaining. We're going to take a look at a few recent news clippings and articles surrounding the company, and then we're going to take a look at the stock. Thank you for your time. Please continue to like, share, and subscribe. Hit that notification bell. Please enjoy.
I am an explorer. Searching for the origins of our universe. And charting a safer path to other worlds. I am a helper, moving us forward one step at a time, and giving voice to every emotion.
I love you.
I am a healer, modeling the future of medicine. And finding a needle in a haystack when every second counts. I am a visionary, uncovering masterpieces lost to the ages. And finding new adventures in a galaxy far, far away. I am a builder, driving perfection in everything we create. I am even the narrator of the story you are watching. And the composer of the music. And when the world faces its greatest challenge, I give us the power to take it on together. I am AI.
A good little brief summary about some of the capabilities that Nvidia is producing. I'm going to open up some research into the CEO of Nvidia, Jensen Huang. All right, so let's take a quick look at Jensen Huang, the CEO of Nvidia Corporation, which he co-founded in 1993. Huang graduated from Oregon State University before moving to California. He earned a master's degree from Stanford University. In 2008, Forbes listed him as the 61st highest paid CEO in a list of U.S. CEOs, and he is one of the wealthiest Asian Americans. He was born in 1963. He's a Taiwanese American, citizenship of Republic of China, United States. His alma mater is Oregon State University and Stanford University. His net worth is $14.3 billion. And he's, again, the co-founder, president, and CEO of the Nvidia Corporation. After college, he was a director at LSI Logic and a microprocessor designer at Advanced Micro Devices, AMD. On his 30th birthday in 1993, Huang co-founded Nvidia and is the CEO and president. He owns a portion of Nvidia stock worth about $1.3 billion as of 2016. He earned $24.6 million as CEO in 2007, ranking him again as the 61st highest paid CEO. Some of his awards: in 2003, Huang received the Dr. Morris Chang Exemplary Leadership Award, which recognizes a leader who has made exceptional contributions to driving the development, innovation, growth, and long-term opportunities of the fabless semiconductor industry from the Fabless Semiconductor Association. He was also a national finalist for the EY Entrepreneur of the Year Award in 2003 and was an award recipient for the Northern California region in 1999. Huang is a recipient of the Daniel J. Epstein Engineering Management Award for the University of Southern California and was named an alumni fellow by Oregon State University. Huang was awarded an honorary doctorate from Oregon State University in 2009. In 2018, Huang was listed in the inaugural Edge 50, naming the world's top 50 influencers in edge computing. In 2020, Huang was named from Eurostar's Automotive News Europe as Supplier CEO of the Year. Huang was awarded an honorary doctorate from National Taiwan University at the school anniversary in 2020. So just a little brief about the CEO of the company that I research. I like to hear from the CEOs of companies that I'm researching. It helps me put together, or at least allow me to try to wrap my head around the vision for the company. So let's take a quick listen on a interview conducted by Jim Cramer at Mad Money.
Now, I pick up a piece of research, Tectonic Upside, but is Nvidia ahead of itself, by Jeffries. Here's a piece by Wells Fargo questioning whether there's the cryptocurrency risks are growing. Here's a piece from JP Morgan saying that it's not possible to maintain the cryptocurrency $250 million run rate, and so therefore we must be concerned about the stock of Nvidia. What do I say to these people, Jensen?
Well, our core growth drivers come from video games. It comes from professional graphics visualization, like what you see over my shoulder. It comes from our data center business, which is now a multi-billion-dollar business, doubling each year, as well as in several years, our autonomous vehicle business. So those are our primary growth drivers. The reason why cryptocurrency became such a popular thing on top of our GPUs is our GPUs is the world's largest install base of distributed supercomputing. And blockchain requires cryptography and the ability to have a public ledger that is completely immutable, perfectly safe, distributed all over the world. And so our processor serves as the perfect processor to enable this supercomputing capability to be distributed. And that's the reason why it's used. But our growth driver comes from the four areas that we talked about. Cryptocurrency just gave it that extra bit of juice that caused all of our GPUs to be in such great demand. But I think over the long term, cryptocurrency will still be here. But our four growth drivers is what's going to make Nvidia 10 times larger than we are today.
All right, just want to be sure about this. What you're saying is that even though a lot of these people are hung up on cryptocurrency, it is maybe not as big as, say, a new big game, maybe not as big as, say, something that you're doing in data center, but people keep saying people think that it is that important, they're going to miss the bigger picture.
Absolutely. Gaming is a much bigger business. Data center is a much bigger business. Our professional graphics is a much bigger business. And of course, in the future, everything that moves will be autonomous, will have autonomous capabilities, and that's going to be a much bigger market. And so cryptocurrency will be here. The ability for the world to have a very low friction, low cost way of exchanging value is going to be here for a long time. And blockchain is going to be here for a long time. And it's going to be a fundamental new form of computing. And so I expect blockchain, I expect cryptocurrency to be an important driver for GPUs. But the core market for our company are the four things that I mentioned.
Again, it's always nice to hear from the CEO of companies that I am researching. Again, it allows me to anticipate or at least wrap my head around the vision for a company. Let's take a look at this article from the Motley Fool. Nvidia announces 4-for-1 stock split. This article came out yesterday, May 21st, 2021. Nvidia's common shares are about to get a whole lot cheaper, and not because the stock is in trouble. The chip maker announced in a press release Friday that it would initiate a 4-for-1 stock split. The company's board of directors has already approved the move, which Nvidia says will make its shares more accessible to investors and employees. So, without going throughout the entire article, the move still needs to be I believe, approved by the shareholders. But since the majority of the shares are being held within the company, I think that it's safe to say that it's going to happen, right? And the article will even go into describe, and I'll leave it in the show notes, that the common stock for every share investors own as of close of business on June 21st. So up until that date, then you can start to see moving forward that the stock will be split up. So again, it's nice to see that some of these companies, that are really, it's been taken off, and Nvidia's been just a beast of a stock. So it is nice to see that they are at least thinking of making the share price more accessible, and it does help retail investors such as myself. And I hold this in a long-term portfolio. I don't trade this one, I just own it. But I think it's important to see that they're making these moves, and I will definitely be anticipating it. And I continue to see where this company is utilized every day. So it's not like it's a stock split just because of speculation, or the price is just getting out of, the price is actually, in my opinion, it's very, very true to what the company is producing. And we're going to jump into a little bit more about the fundamentals of Nvidia. Okay, we are here on Seeking Alpha in the Nvidia Corporation page, taking a quick look at some of the data involving Nvidia. We see the price there at $600 a share. The EPS forward is 13.61, PE forward 44, the dividend rate forward is 64 cents, yield is 0.11, short interest 1.11%, market cap is 373.2 billion, volume of 16,824,000, and continue to rise. The company is expecting some revenue of next year. The estimate is increasing from this year. This year it had a revenue of, reported on January, 16.68 billion. Next year its estimate is to grow 22.46 billion, and then an estimate of 2023, a revenue estimate of 25 billion. And this chart, the revenue chart, is obviously something that you want to see. At least me, myself personally, I like to see companies that are performing quite well. The earnings per share, the estimate last year, right, was coming in at 2.81. The actual was 3.10 a share, which is awesome. And next year the EPS estimate is 3.28. And as we see here, the price movement, the earnings per share has it's been outperforming the estimate, which is nice. And there's no surprises here, at least on my part. This is pretty standard for this type of company, and the approach that they have been utilizing thus far to continue their growth is something that me as an investor likes to see. That you're not really, at least I don't hold this, right, for, it has a dividend, but it's a very, look at that yield, right? It's not even 1%, but at least they have a dividend, right? And it's a mammoth of a company. It's a very, very, very well run company, but you don't buy this company for the dividend growth. I mean, of course, I hold it in a long-term portfolio with a bunch of other, dividend paying companies, but I have it in a growth sector, so I kind of use I see this as a growth company. But hey, it at least has a dividend. And just to touch on a little bit of the technicals, the simple moving averages, the 10-day SMA is at 568.36, the 50-day SMA is 569.58, and the 200-day SMA is 538. And it's just it's staying above it. It's continuing to grow. So I think it makes perfect sense for the stock split, in my opinion, compared to some of these other big cap companies, mega cap companies that are just not even considering stock splits. It's nice to see it again. Again, it's the market cap 373 billion, total debt of 7.7 billion. It's got 11.56 billion in cash, and the ownership here, it's owned quite heavily by institutions, and is secondly held in the public sector. So a lot of I like to see if it's going to be one way or another. There's a preference of whether individuals or insiders or people who own the company have the majority of stock. But since this company is owned and it's held in a lot of ETFs, that I think any institution that is looking to grow, they want to have a piece of this company in it. So I'm not surprised at the ownership. Again, it is nice to see that they are taking upon themselves to be active in some of the decisions made. So a lot of the people that are insiders are at least deciding, what to do with the company in terms of price and earnings and their share price and the stock split. So just, to recap some of the stuff that I like to see, it is held, their ownership here. I'm always just going to take a look at it. Some of their peers, Intel, Taiwan Semi, Broadcom, and Texas Instruments. In my opinion, Nvidia is the best of breed among their peers. But these are solid companies as well. So let's continue. Okay, let's take a quick look at my trading view, the Nvidia chart. I'm on the hour chart, and I'm going to stretch back to its last earnings call, where it beat earnings, it beat its estimate, and the stock trended down after its dividend payment. It kind of bounced up off of that, which is nice to see. But it's funny how things work out in the psychology of earnings and that date and what's going to happen. But since the company is doing a good job, one might expect, if ever, that one of these days, one of these earnings reports is that the stock is actually going to improve after an earnings call. But maybe it's because the price is already baked into it. Maybe for other reasons, there's a good amount of selling off once people or institutions find out that the company is doing quite well. And so it's, possibly people taking money off the table. So as we look, and we're going to kind of now approach the movement from March and April, and it skyrocketed above $600, and it's been doing very, very well. Of course, since its crazy lows back in the COVID dates, now where it's trading at around $599, $600. And I think that depending on what we're going to see here, that after the earnings estimate, it could happen again right before the stock split, that perhaps now the price will take off, or if it trades sideways, depending on your view about it, what it can and cannot do. Play around with my chart a little bit, and right around here. So the 550 mark, I seriously doubt, I'm just making some levels of support and how it traded. Big swing right from the 590, high 580s down to the 540s, bouncing around 500, testing $600. And if the price is going to do a 4-for-1 at $600, the price could be roughly around $150, but up until the point that it gets split, depending on what's going to happen. So I think that anything can happen, but up until the point of the stock split, it's kind of reminding me a little bit about what Tesla did, and even Apple when they did their stock splits. That people were, running to get into the stock. People were trying to establish a position or adding to their position. And, there's different schools of thought on stock splits, that it doesn't do anything literally to your holdings. In my opinion, it does, it does, because you're getting it at a more affordable price. You're able to accumulate more. But if you get more now at this price, whatever you're getting, it's going to be quadrupled. It's going to be multiplied by whatever they're going to stock split it at. So yes, I see both sides of the coin, but I don't know. It's just, for me personally, it's a moment, I think, where people are getting excited about it. So depending on what happens to it after the stock split, I could see where people are more likely to get away from it. Maybe see what happens after the stock split. I would like to see the pattern go continuously upward, and if we were to have some more movement, and let's just say, right, that the price tested this trend line. If it went below this trend line, I see it as buying opportunities. If it just tanks right around the earnings and it trades really, really low, then I see it as a huge buying opportunity, and maybe that trend line becomes a level of resistance until we see what happens. And again, this company is tied into, it has its operations in a bunch of different things: cryptocurrency, gaming, AI. So I see it as just a really nice company to be a part of. So to the moon. All right, I'm going to leave it here. Thank you for your time. I really do appreciate it. Please continue to like, share, subscribe, hit the notification bell. It allows people to find my content and allows me to continue with this channel. If there's another company, ETF, IPO, or cryptocurrency that you'd like to see me research, just drop it in the comment section below, and I would do my best to get to it as soon as possible. Again, thank you. I hope everyone is doing well. Sorry for the delay. It's been a while since I made a video, but I'm going to knock out a lot here in the next couple of days. So have a great weekend. Take care.